You're still confused about support and resistance? Let me show you how to draw it on the hourly chart. Now, it doesn't matter what system you're using, support and resistance are the two things you're always going to need it in your trading. Just to clear some basics, in an uptrend, you typically see a level from where a stock rejects. This level is known as a resistance. And on the other hand, when the stock is going down, you're going to see a support level. The stock typically bounces from this level. This is known as support. Let's dive straight into the juicy stuff now. I typically use hourly levels because I feel like if we mark the daily levels or weekly levels that are not as solid for the intraday trend, and you're going to be coming to hourly time frame anyways if you start from weekly time frame. So hourly time frame is going to be better overall because it's going to give you the main picture of what's going on in the stock market right now. Let's look at this pie chart and clear everything from here. We're going to draw it all fresh. Now, typically what I look for is a rejection. You can see this huge red candle rejecting from here. So what we're going to do is I use this peak magnet. It's just easier to draw levels using this magnet on because it's just going to drop it like this, and then you can just quickly go and draw your levels. So first off, what I basically do is I look for these huge rejection areas for resistance and just go there, draw it. You just have to be quick. You don't have to think that long. And you can see all the candles are green and there's a red candle. That means the buyer stepped in. So we're going to mark this as a level. And if you go see previous levels, it's going to match with this. So they always align with kind of like each other. You can do the same thing here. And if you look at the bigger picture, it's always going to align, and you can always go and mark the wicks. So you kind of like go see like huge sell-offs or huge buyers stepping into the market and just like mark all the wicks. Typically you just look for 3 levels up and 3 levels down, but like it depends on the volatility that's going on in the market. If the market is like pretty volatile, you probably need to mark like 6-7 levels. If you go here, you can see there's like multiple touches here. So we always give preference to multiple touches rather than just like one wick. That's the easiest and quickest way to go about the levels. There's one more thing that I would like to talk about. So there are these levels that I draw, and then there are dynamite levels. So let's go back to hourly time frame, remove all the levels. I'll just show you in a minute what I mean about dynamite levels. So if you go and mark 600, it's going to be a dynamite level. Same for like, let's say 550 is going to be a dynamite level as well. So let's go and mark 550. So these are just like levels by itself because these are psychological numbers. $50, $10, like 555 is going to be another dynamite level. See, it just bounces and rejects from 55555 because it's just like a psychological number that everybody thinks about. So they always have a significant effect. It doesn't have to be technical always. Like when it comes to psychological levels, you can directly have a level there. Now let's say the dynamite level is aligning with your technical level. You can say that that's a strong level. If this helped you even a little bit, that's a sign for you to follow me right now because I have a ton of content like this coming for you. With that being said, I'll see you next time. All right, cheers.